Hello everyone. Today we are going to discuss how to prepare a profit and loss account. In the last class, we were discussing about the preparation of trading account and how to find out gross profit, cost of goods sold, etc. And we have solved some problems also related to that. Today we will be discussing about how to prepare a profit and loss account and what is the format of a profit and loss account, and after discussing that we will be discussing a problem to prepare final accounts of a sole trader. So let us start with the format. Here is the format of profit and loss account, pro forma of profit and loss account. Profit and loss account heading can be given like this. Just like trading account, we will be writing here profit and loss account for the year ended 31st March or 31st December of that particular year. So debit side column heading expenses or losses, and credit side column heading incomes or gains. That also just like a trading account. Normally we prepare profit and loss account as an extension to trading account. So after drawing the trading account, profit and loss account will be following that, or it will be drawn as a continuation to that. So on the credit side, we can write the first item by gross profit brought down. That means what was the gross profit carried down as the balance of trading account, that will be brought down if it is profit. If it is loss, it will be brought down to the debit side, gross loss brought down. And after that we will write all the expenses one by one. All the expenses in the sense all the indirect expenses can be written one by one. So lot of indirect expenses are there. What are the indirect expenses? All the direct expenses we have told that it will be written in the trading account. Like that, all the indirect expenses can be written in the profit and loss account. So say an example, salaries. If it is given salaries, we will write, or if gives salary and wages, that also can be written, like rent, rates and taxes, printing and stationery, postage expenses, insurance premium, lighting expenses, that means electricity. If it is given factory lighting, we will be writing in the trading account. Then telephone charges, legal expenses, audit expenses, traveling expenses, trade expenses, general expenses, carriage outward or carriage on purchase. Carriage on sales. Carriage inwards means carriage on purchase of raw material. Carriage outwards means carriage for taking the goods for sales. So it will be an indirect expense. Then advertisement or publicity, commission paid to agents, brokerage, bad debts. Then export duty. Export duty means export for duty given for exporting the goods to foreign countries. That also indirect expense. Then packing expenses, carriage on sales, then freight on sales, that means that also equal to carriage on sales. So freight and all we have discussed in the last class itself. Then sales and promotion expenses, sales promotion expenses, or if given freight outwards, we will be writing in the profit and loss account. Freight inwards will be shown in the trading account. So if we have to see what is freight and all, you can refer the previous video of trading account. Then warehousing expenses, discount allowed. Discount in the expense side means discount allowed, that can be written. Then sales tax can be written. Then repairs and maintenance, depreciation of fixed assets, fire insurance premium, bank charges, then legal charges, miscellaneous expenses, loss on sale of fixed assets, donation or charity paid, conveyance charges. Conveyance charges means traveling charges. Then interest on loan, etc. will be written. And in the credit side, the first item after gross profit, we can write all the indirect incomes. All the indirect income can be written. For example, commission received, rent received, interest received, discount received, interest on marketable securities, profit on sale of marketable securities, then profit on sale of fixed assets. Then after that we can write bad debts recovered if it is given, that can be written. Then apprentice premium. Apprentice premium means if any trainees, if we are giving some training to any of the people, we can collect some premium from them or some fee from them, that is called apprenticeship premium. Then next we can say that income from other sources. Then after that miscellaneous expenses. So all these things are the indirect incomes, means all the incomes other than those which are not directly related to production. So we will be writing the total here. If the income side is more, we will be writing the total here. Say we have written here as total we have written, and the same total can be written here also. So that total will be carried over to the debit side and we will be getting the profit here. So that profit, what can be written? Profit is called the profit obtained from the profit and loss account, or the balance obtained from the profit and loss account can be called as net profit, and that will be transferred to capital account. This net profit obtained from the profit and loss account will be transferred to capital account. Okay, if the debit side of the profit and loss account is more than the credit side, we will be getting net loss. The balance we will get here in the credit side, that will be net loss. So we can write their net loss transferred to capital when the expense side is more than the income side. Okay, so we can write that here, net loss transferred to capital, that will be the balancing figure. Okay, if the expense side exceeds income side. Okay, now let us see, this is regarding the format of profit and loss account. Now we are going to discuss about balance sheet, how to prepare a balance sheet. Before discussing the format of balance sheet, let us see a short note, that is grouping and marshalling of assets and liabilities. What is grouping of assets? Grouping of assets or liability means keeping together some common items under a common heading, that is called grouping of assets or liabilities. That means putting together items of similar nature under a common heading is called grouping. Putting together items of similar nature under a common heading. Okay, items, instead of item we can write similar nature. Putting together items of similar nature under a common heading is called grouping. That means, here is an example. For example, items like cash in hand, cash at bank, sundry debtors, then bills receivable, etc. are called as current assets. So these items can be shown in the balance sheet under the head current assets. Or otherwise you can say that in current asset itself, sundry debtors we will write. Sundry debtors is the combination of all the customers who have to pay money to us. So under the heading sundry debtors, we will include all the people who have to pay money to us. So that is also an example of grouping of assets. Like asset in liability side also we can include all the current liabilities like sundry creditors, bills payable, bank overdraft, all these things can be kept under the head current liabilities. That is also an example of grouping of liabilities. Okay. So next heading is marshalling of assets and liabilities. Marshalling of assets means arrangement of liabilities. Arrangement of liabilities or assets in a certain order, that is called marshalling of assets and liabilities. For example, in the balance sheet, we can prepare balance sheet in two different ways. That is called marshalling on the basis of liquidity and on the basis of permanence. Under the basis of liquidity, we will write the liquid assets. The most liquid assets and liabilities will be shown first, followed by least liquid assets and liabilities. That method is called arrangement of balance sheet or preparation of balance sheet on the basis of liquidity. Then on the other hand, preparation of balance sheet on the basis of permanence. That method is on the opposite of liquidity method, where all the permanent asset and liabilities will be shown first. Permanent liabilities and assets means, for example, the most permanent asset is intangible assets or fictitious assets. All these assets will be shown first. For example, goodwill will be shown first. Then after that, land and building, plant and machinery, like that. So the liquid assets and assets will be shown at last, and the least liquid asset or the permanent asset. Permanent assets means the most permanent asset means the assets which cannot be sold out or which will be very difficult to realize. So such a type of assets will be shown first. Same way in the case of liability also, capital is the most permanent liability. So that can be written first and followed by other liabilities on the order of permanence. So what is marshalling and of assets and liabilities is that arrangement of assets and liabilities in the balance sheet is called marshalling. And how it will be arranged? Assets and liabilities will be marshaled in the balance sheet either on the basis of liquidity or on the basis of permanence. Either on the basis of liquidity or on the basis of permanence. Okay, so this is the way of preparing balance sheet. We can prepare balance sheet either on the basis of liquidity or on the basis of permanence. Here we are making format of balance sheet. This is the format of balance sheet. First format we are writing on the basis of what? On the basis of the liquidity or in the order of liquidity. So let us write all the assets and liabilities. Here we can start with the asset side. The most important liquid asset is cash in hand. That can be written first, then followed by cash at bank, then bills receivable, then sundry debtors, then close this loose tools, then closing stock, or closing stock can be written just before loose tools also. Then after that stores and spares, then short term investments, then after that long term investments, then from here onwards, long term investment onwards, we will write the fixed assets like office equipment, furniture and fittings, then after that plant and machinery, then it will be followed by land and building, Okay, plant and machinery, then motor vehicle can be written, then land and building can be written, then all the intangible assets and fictitious assets. Goodwill is an intangible asset, copyright is a fictitious intangible asset, then computer software, then brand, trademark, etc. Like this, all the assets can be written. But start with the most liquid assets and followed by the least liquid assets. And on the liability side, we can write the first item, bank overdraft can be written, then outstanding expenses can be written, then creditors can be written. So before creditors we can write bills payable, then sundry creditors can be written, then after that loans, then after that at last capital we will write. Listen here, capital we will write in inner column and we will add the net profit, because it is written that net profit transferred to capital. That is what we have seen in the format of profit and loss account, net profit transferred to capital. So if it is net profit, it will be added to capital, and if it is net loss, it will be deducted from capital. So here it is net profit, so we are adding, then we will equally add interest on capital. Okay, interest on capital can be added, and we can write the total inner column itself, so that we can deduct if there is any items to be deducted. So like net loss, if it is net loss we can deduct that, then after deducting the net loss, again it can be written the amount in inner column, then from that amount we can deduct the drawings, and after deducting the drawings, from the amount left, if there is an interest on drawings, that also can be deducted. So after that we are writing the amount inner column itself, and at last we will be writing the income tax. Income tax will be deducted from capital. So income tax means the tax paid by the employer. Employer or the owner of the business. If owner's life insurance or income tax is deducted from firm's money, so that amount also can be deducted from capital. Okay, so these are all the items in balance sheet if it is preparing on the basis of liquidity. So now let us see the pro forma of balance sheet on the basis of permanence or in the order of permanence. So let us see the asset side. We have told that first the least liquid asset will be shown. So it is the opposite of the balance sheet which we have seen in liquidity method. So we can write all the items, computer software, bonds and trademarks we have written first, brands after that, computer software, then copyright and patents, then goodwill, then after that land and building, then can write motor vehicle. Same balance sheet items we have changed into the other method. Then plant and machinery. Then next we can write the furniture and fittings. Okay, then after that office equipments, then long term investments, then short term investments, then after that stores and spares. Stores and spares can be written. Then after that loose tools can be written. Then comes sundry debtors, then bills receivable, then after that copyright and patents, then bank balance and cash in hand. See, one item from the last balance sheet we have missed here, closing stock. That closing stock can be written down to loose tools. After loose tools you can write closing stock just above sundry debtors. Okay, so here in the liability side we will write the item capital. Capital will be written here. So just like what we have told in the other case, same way we can write the capital. Okay, capital amount can be written. And after capital what we will write? Yes, the loan. Then after that sundry creditors. Then after sundry creditors, bills payable. Then outstanding expenses. Then after that bank overdraft. Okay. Then after bank overdraft we can write the provision for tax. So these are all the items in the balance sheet if it is preparing on the basis of the permanence. Okay. Now with this format, so we have studied what is the format of profit and loss account and how to prepare balance sheet. Its format we have discussed, and an important short note also we have studied grouping and marshalling of assets and liabilities. So this is very important, this short note. It can be asked for the examination also. Okay, so now let us solve a question. We will be preparing a trading account, profit and loss account and balance sheet. So here is the question. Following is the trial balance extracted from the books of Messrs. Royal Transport. You are required to prepare final accounts for the year ended 31st March 2020. Here is the trial balance, particulars, debit amount, credit amount, and we can straight away see all the items in the trading trial balance. And after trial balance we have been given with the value of closing stock at the end of the year. So value of closing stock at the end of the year was 35,500. So we know that what is a trial balance and how to prepare trial balance and all. So with this trial balance, let us prepare trading and profit and loss account and balance sheet. So we have already told that trading account and profit and loss account will be prepared together. So we can write the heading like this. In the books of Royal Transport, trading and profit and loss account for the year ended 31st March 2020. So you can write, if you are when you are preparing the final accounts, you will be preparing trading and profit and loss account together. So the heading can be trading and profit and loss account for the year ended 31st March 2020. So we know that what are the items should be shown in the trading account. The first item, if it is an existing business, the first item will be opening stock. We have here the opening stock in the trial balance, that we can write first to opening stock. How much? 40,000. After opening stock, what is the next? Yes, purchase. So purchase can be written. Purchase, here in this question there is no purchase returns. Purchase is there, but sales return is there, but purchase return is not there. Since purchase return is not there, we can write the amount of purchase in the outer column itself. Then after that we can write the next item. So let us see each item from here. Opening stock already taken. Rent need not be taken. Rent is an indirect expense. Capital liability. plant and machinery asset, land and building asset, creditors liability, power. Power means electricity used for the factory. So we can write that first. After purchase we will write power. Amount of power is 3500. Okay. Then after power purchases we have taken, bills payable liability, sales return will be deducted from sales, telegram and postage indirect expense, loan liability, wages, it's a direct expense. Like this you can make tick mark and take each item, that will be easy, because one item if it is given in the trial balance you need to take that only one place. So when you get the question, if you tick mark each item and take, you will not get confusion. So wages is ended. Okay, so wages also over. Then salary, indirect expense, discount, indirect expense, insurance, repairs and renewals, sales we will be taking. So sales is given, we can write the sales next. Sales return is there, so we have to write sales inner column, sales return is there 2500, that we can write less returns. You can write less sales returns. Here because of space shortage I have written only returns. So 1,50,000 minus 2,500, total 47,500. So now let us see which are the other items. Sales over, legal charges indirect expenses, then trade tax indirect expenses, then debtors asset, investment asset, general reserve liability, bad debts indirect expense, trade expenses indirect expense, commission indirect expense, traveling expenses indirect expense, drawings will be deducted from capital. So these are the items. Now last item is closing stock. So closing stock is given here. It is given outside the trial balance. So we have to take two places. We are taking here closing stock in the credit side of the trading account. So now we can total that, because all the items are taken, all the direct expenses and incomes are taken. So let us total. I think the credit side is more than the debit side, so we can total credit side, and that amount can be taken to the debit side. Okay, 1,83,000. From that we have to deduct the amounts in the debit side. So we will be getting gross profit 60,000, gross profit carried down. So trading account is over. Now next part is profit and loss account. So profit and loss account, what will be the first item? Yes, if there is gross profit, that will be the first item. Gross profit or gross loss will be written. Since it is gross profit, we have written on the credit side. Then we can write all the indirect expenses one by one, we can check. So first item, opening stock already taken. Then rent is there, so we can write the next item, rent is written. Then after rent, power already taken, bills payable, sales return already taken. Yes, next telegram and postage. So let us write the next item, telegram and postage. Rent, how much was the amount? Rent 2,000. Postage and telegram 400. Telegram and postage. Loan is a liability. Wages we have already taken. Yes, next item is salary. So salary 2,500. Okay, so we can write salary here 2,500. Then after salary, the next item is discount. So discount is an expense See, discount two places it is given 1000 in the debit side, 2500 in the credit side. So what is given in the debit side, we know that it may be sometimes assets, loss or expenses. So here it is discount. Discount we know that it is not at all an asset or liability. Discount may be discount received or discount allowed or paid. Since here it is given as an in the debit side, it means that discount is allowed or paid. That means discount is an expense. So that can be written here. Like that, discount amount is there in the credit side also. That means that much discount we received. So it can be shown on the credit side. Discount 2500. Okay. Next item. Discount over next expense is insurance. So let us write insurance. Insurance amount 3200. Then after insurance, what is the next item is, we can write next item here. It is given commission. Commission can be written now. So commission we are writing 1250. Okay, so now insurance over. Okay, next here one item is there, repairs and renewals. That also can be written. Repairs and renewals 2000. Then after repairs and renewals, sales we have already taken. Now legal charges. If there is any charge paid for filling the application or something like that, that is called legal charges. That is 700 here. Then after legal charges, trade taxes. So we can write trade taxes 1200. Then after trade tax, debtors is asset, investment is asset, general reserve liability. Yes, here comes bad debts. Let us write bad debts here. Bad debts how much? 2000 rupees. Then after bad debts, there is trade expenses. So trade expenses can be written like this, one by one you have to consider and write 4500. Next, after trade expenses, commission we have already taken. Now traveling expenses. Traveling expenses 1230. Okay, so we have written all the indirect expenses. Now any indirect income is missed? No, all the indirect income. No indirect income is there. Only one item, discount. So let us total here. Credit side is more, 62,500. That can be taken to the debit side, 62,500. So what will be the balance? Yes, 40,520. Since income side or credit side is more, the balance which we have obtained is net profit. So that should be transferred to capital. Okay, you can, if you want, you can write that in bracket also, what transferred to capital, that one. Okay, net profit transferred to capital 40,520. Now let us see how to show these items in the balance sheet. Many other items are left here. That means we have left all the assets and liabilities, and we have to include all the assets and liabilities here. Let us start with the assets. we can write this balance sheet on the basis of liquidity. So from here we can find out the most liquid asset. Cash in hand is not given. From the given item, the most liquid asset is debtors. So let us write debtors 75,000 first. Debtors 75,000. Then after that, after debtors, the next item is closing stock. One important thing is there. An item given outside the trial balance can be taken two places. One in balance sheet and another one in trading and profit and loss account, or as per the situation. That means this is belonging to the category of adjustments. Adjustments and all we will be studying in the next class. So now you have to understand that if closing stock is given outside the trial balance, you have to take two places. Okay, balance sheet and trading account. So we will be writing closing stock here. Okay, but if the closing stock is given inside the trial balance, you have to show only that in the balance sheet, because it is already adjusted with the sales or purchase. Okay, so that's all. So closing stock is written. Next item is investment. Investment can be written. So after closing stock, we can write investment. Then after investment, we can write all other assets. Here we have plant and machinery. So we can write plant and machinery. Plant and machinery is written. Plant and investment amount 65,000 and plant and machinery 1,20,000. Okay. Next item here we have is land and building. Land and building also we have not taken here. So that's what I have told you, that you have to tick each item and take, so that you will not get confusion to find out the missing items. So it will be easy to find out the items which are not taken if you tick mark and take each items. So here in the balance sheet, all the assets are entered, these many assets only. And let us see the liabilities on the basis of what? Liquidity basis. So in that first item, creditors. Creditors can be written. Creditors how much? 50,000. So creditors we are writing here. Creditors 50,000. Okay. Now the next item is, yes, here it is given bills payable. So bills payable is given here. So that bills payable we can write after sundry creditors. So bills payable is again 50,000. Then after bills payable we can write next item. Here it is given after telegram and postage, it is given loan. So loan can be written next. Next item is loan. What is the amount of loan? 1,10,000. Loan 1,10,000 is given. So all the liabilities except capital and general reserve is over. General reserve is given here 50,000. So let us write general reserve. General reserve is 50,000. So that 50,000 can be written here. Okay. Now this is the turn of capital. Capital we have here drawings and profits. So we can write the capital in the inner column to adjust the profit and drawings. So along with the profit, along with the capital, we can add a profit. Net profit we know 40,520, that is added. and after addition the total amount can be written down, and from that what we have to do, we have to deduct the drawings 20,020. Okay, after that the amount will be written down. Okay, balance sheet 5,50,500 is the liability, and you can total the asset side also. We have to get equal amount, then only the problem will be correct. Okay, so today we have discussed the format of profit and loss account, and we have studied grouping and marshalling of assets and liabilities, and after that we have prepared the format of balance sheet as per the order of liquidity and order of permanence. Okay, and after that we have solved a question. So this question also, by pausing the video, if you want, you can go through the question once again and can solve by yourself, and after that you can compare the answer which we have explained here. Okay, and after doing all these things you can find a similar type of problems from your textbook and reference books and you can solve those. Okay, so I hope all of you understood how to prepare the final accounts of sole trader. So next class in accountancy we will be discussing one or two problems based on this chapter. Okay, thank you very much.